Tax evasion. Understanding cash's impact on tax evasion practices. Agenda. Understanding tax evasion, the role of cash in business transactions, how cash transactions facilitate tax evasion, detection and prevention of cash-based tax evasion. Definition and forms of tax evasion. Understanding tax evasion. Tax evasion is the illegal act of avoiding taxes owed to the government through deceitful practices. Forms of tax evasion. Common forms of tax evasion include underreporting income, falsifying deductions, and using offshore accounts. Challenges for authorities. Different forms of tax evasion present significant challenges for tax authorities in enforcement and regulation. Legal implications and penalties. Consequences of tax evasion. Tax evasion can result in severe penalties, including substantial fines and possible imprisonment for offenders. Legal framework. Understanding the legal framework governing tax evasion is crucial for businesses to ensure compliance and avoid penalties. Ethical business conduct. Engaging in ethical business practices, including tax compliance, is essential for maintaining a good reputation and avoiding legal issues. Examples of tax evasion. High-profile cases. Numerous high-profile tax evasion cases have emerged, showcasing the extent of the problem and public scrutiny. Methods of evasion. Tax evasion methods can include offshore accounts, false deductions, and underreporting income, illustrating the complexity of the issue. Penalties imposed. Penalties for tax evasion can be severe, including hefty fines and imprisonment, serving as a warning to others. Prevalence of cash transactions in various industries. Retail cash transactions. In the retail sector, cash transactions are prevalent due to their convenience for both customers and businesses. Hospitality sector payments. The hospitality industry often relies on cash payments, which can simplify transactions for customers at hotels and restaurants. Construction industry operations. In construction, cash transactions are common due to the nature of contracts and customer preferences, impacting financial reporting. Advantages of using cash for businesses. Immediate liquidity. Cash transactions provide immediate liquidity, allowing businesses to access funds instantly for operational needs. Reduced transaction fees. Using cash often results in lower transaction fees compared to credit or debit card payments, benefiting the bottom line. Customer privacy. Cash transactions help maintain customer privacy by not leaving a digital footprint, which can be advantageous for businesses. Accounting challenges. Despite the benefits, cash transactions can create challenges in accounting, such as tracking and reporting cash flow. Challenges and risks associated with cash transactions. Tracking revenue difficulties. Cash transactions can complicate revenue tracking, making it harder for businesses to maintain accurate financial records. Illicit activities risks. Cash transactions can facilitate illicit activities, including tax evasion, which poses ethical and legal risks for businesses. Responsibility in operations. Businesses must recognize these risks and manage their cash transactions responsibly to avoid potential legal issues. How cash transactions facilitate tax evasion. Underreporting income and sales. Tax evasion methods. Underreporting income is a prevalent method of tax evasion among businesses, particularly through cash transactions. Impact on tax liabilities. Minimizing reported revenues allows businesses to significantly reduce their tax liabilities, affecting overall tax revenue. Creating fraudulent expense claims. False expense claims. Businesses may fabricate expense claims using cash transactions to reduce their taxable income, which is illegal. Impact on tax integrity. This fraudulent activity undermines the integrity of the tax system, affecting honest taxpayers and revenue collection. Severe penalties. Engaging in fraudulent expense claims can lead to severe legal penalties, including fines and imprisonment. Hiding assets and money laundering. Role of cash transactions. Cash transactions are often used to facilitate hiding assets and laundering money, making it difficult to trace origins. Criminal enterprises. Criminal enterprises exploit cash to obscure the origins of illicit funds, complicating efforts to track illegal activities. Tax enforcement challenges. The use of cash complicates tax enforcement efforts, making it harder for authorities to monitor financial activities. Government and regulatory measures. Increased reporting requirements. Governments have introduced stricter reporting requirements for cash transactions to enhance transparency and reduce tax evasion. Harsher penalties for offenders. Legislation now includes harsher penalties for individuals and businesses found guilty of tax evasion, often as a deterrent. Tax compliance initiatives. Governments are implementing initiatives to encourage tax compliance and educate taxpayers on their obligations. Technological tools for tracking transactions. Role of technology. Advancements in technology are essential for detecting tax evasion and ensuring compliance in financial transactions. Data analytics tools. Data analytics tools allow authorities to analyze transaction patterns and identify irregularities efficiently. Artificial intelligence. Artificial intelligence enhances the ability to detect discrepancies and automate monitoring processes in financial transactions. Best practices for businesses to ensure compliance. Accurate record keeping. Maintaining accurate records of all transactions is essential for compliance with tax laws and regulations. Promoting compliance culture. Fostering a culture of compliance within the organization encourages employees to adhere to policies and regulations. Enhancing business integrity. Implementing best practices not only aids in compliance but also enhances overall business integrity and reputation. Conclusion. Concern for cash transactions. Tax evasion poses a serious concern for businesses involved in cash transactions, affecting their financial integrity. Implications of tax evasion. Understanding the implications of tax evasion is vital for businesses to safeguard their reputation and operations. Compliance measures. Implementing compliance measures helps businesses avoid legal repercussions and maintain their integrity in operations. Thank you.